Thank you for listening to Mailbox Money, your guided tour through safe, sacred, and speculative investing with a plan and a purpose to do more good with newfound peace of mind. All right, everybody, welcome back to another episode of Mailbox Money. I am Jackson Wood, joined as always by my partner and my friend Ryan Kruger. In today's episode, we are going to be talking about math. Now, before I lose some audience listeners here when they hear the word math, this is an incredible story, one of the most incredible stories that we have learned a very valuable and important lesson from. When you look at the most simple form of stock market math, which is, do you have debt or do you have cash? And the lesson learned, which is just inspired by a book, and we're going to get into all of this, it's an incredibly important example of why we believe in different stocks inside of two different stock portfolios, right? So the backbone to everything that we do, and you've heard us talk about this, is dividend growth. And you can understand if you've listened to any episodes why we believe that's so important and the role it plays in achieving your Freedom Day. But along with your sacred money, your dividend growth, some safe money allocated into bonds or cash, we also like the freedom to explore and to look for unusual businesses with unconstrained upside that might not choose to pay a dividend. But when you look at the math, you can see why these are incredible opportunities. And so that's what today's show is about, these opportunities that we've discovered and some of the incredible stories of these businesses and their CEOs and founders that we have learned along the way.
And the good news, which just keeps getting better, is if you don't like math, if you're not as nerdy as us, and we are going to get literally under the hood here in a second, this would be one episode to pass along to somebody in your circle, your family, or your business that investing seems unapproachably difficult or confusing, which, if we're humble enough, is actually all of us, depending on the day. But I was asked to teach a class, and it is the highest of high finance and degree and achievers and resumes and all of those understandable and good goals. And I kind of shocked the professor when I talked about wanting to get so much more humble and talk to the one kid in the class who feels the furthest away from any of this math or investing. And by the end of this conversation, and she spent 13 years in the belly of the beast of Goldman Sachs, so she knows a thing or two about math, and she thought, what a great idea to share the beauty, the humble long game. And I'm going to begin this story with a quote. If anybody thinks this is impossible or inaccessible, I think the stock market is rigged, indeed. And I think it's rigged for the small guy or gal. And that's why we want to share some of these stories, all nonfiction. They're the wildest adventures, in my opinion, to maybe make this math a little more understandable and, dare I say, interesting. For me, it's fascinating and incredible. So this guy I learned a lot about and have been following for a number of years and know his story well. I thought it would be fun to share it. He said, and I quote, "Isn't this unbelievable? 2 years ago, I was driving a forklift every single day. And now Wall Street says my business is worth $80 million. That was the day his company launched an initial public offering, an IPO, that he did not know what an IPO was. He didn't know what a prospectus meant. He didn't finish school. He thought there's no way in the world that he could take a company public, even when he learned what that meant, because not a single one of his executive board had ever finished college. So buckle up. Let's dig in with grease under our nails, as he was complimented. He said that was his favorite compliment. And here's a couple of lessons that I take away from his story that I wanted to share today. That sweaty skin in the game. His favorite compliment was, nobody's ever been asked to do something I'm not doing with them side by side with grease under my fingernails. A lesson, incredible faith and family lesson of, we've always talked about it, the most important part of any plan is who you are with. Old Willis is going to be a great example. And the energy and curiosity, how contagious that can be inside your business or around your supper table with your most important business, your plan, your home, your crew, your family. We can apply these business principles inside our own homes, in my opinion. And last but not least, what he's proven, and the reason we do a stock selection tournament is that competition, and the lesson he learned from competition, you're going to love. Just wait. Um, and his best advice to any kid, as I'm going to share in this class, be good, so good at something you just become undeniable. And with that, we'll kick things off. But I want to share this book as a recommendation. Junk to Gold. The non-MBA, non-high finance story of how that little $80 million company is now worth $44 billion. I recommend the book. We're going to share on this show. Jackson was really humbled and amazed. I didn't keep up with it. I don't even know how to log onto the dashboard. He reminded me, but we've been fortunate and privileged and super excited that the number of listens to this podcast and over there on YouTube, which Jackson's in charge of that, has grown. And that made me excited. All we ever wanted to do was share a couple of pages from our playbook every week. If that takes anybody to a better place, wherever that is, I'm delighted. So if anybody leaves a comment or a question with the podcast, we'll do a random drawing and I will send a copy of this book, one of my favorites, an easy read that I think will inspire anybody from the highest of finance to someone who is just starting out saving. And I'm excited to share this. So the earliest lesson old Willis Johnson received from his dad, and we are all our dad's sons, around that supper table, which, as I've said, I'll take that over any MBA any day, is his dad was a deal maker. He couldn't do math or read, by the way. And they had found a piece of dirt for sale listed on Friday night in the newspaper. And he looked back and he said, the first lesson I ever learned was how to do homework, get dirty. We walked the little piece of dirt over the weekend before any of the other bidders could show up on Monday morning. And before they showed up, they already knew what it was worth. And they offered a price and they made $15,000 on that first piece of property to be used as a salvage yard, a junk yard. Ladies and gentlemen, you can apply that lesson. I do it the same thing over the weekend to this day in whatever you are genuinely interested in getting dirty and learning more about than your competition. You have an advantage in knowing what it's worth. We had an episode, was it last week, Jackson, or the week before, on just that, knowing what you own. The price is what is quoted and what people are paying. The value is what you get. And I'm going to take a pause here in a second, Jackson, for you to work in, but I apologize up front. I get really excited about Willis's story. When he was finally ready to go out on his own after learning from his dad, it was a bigger patch of dirt, and it was a lot of money, and it was $75,000 that he didn't have. He have saved up yet, and he had worked and worked and worked and knew every inch of the salvage yard business. You talk about a less glamorous business, which is why it's my favorite example. We just had a couple of interns that are now sophomores in college, and probably the biggest smile I've gotten in a long time. One of them called me last week, and he had got accepted into this really competitive business program at Texas A&M. And here I am, and a Longhorn in Houston, Texas, so excited. And his one takeaway from his time here was, man, I really enjoyed learning about what an uncrowded trade is. And I say uncrowded trade because you can apply that inside and outside the stock market and go down a lot of good paths. There's no more uncrowded trade than a junkyard. So Willis found one, didn't have enough money, told his wife that they'd have to sell the only thing they owned. which was the house that she loved and they had just finished moving into. She simply replied, and I can't imagine the look on that face that night at the supper table, but none of the rest of this story could have happened if that dinner had gone any other way. And that's why I want to stop and pause and say who you are with is more important than anything else. She said, and I quote, "But where will we live?" And Willis explained, "Well, I did some homework, and on that lot is a 12-foot wide trailer already in the junkyard, honey, so we can live there." And that very first night, she said she could hear the mice chewing through her wall as they lived on top of trash. Okay, that's okay. I'm so excited. That's the first time I've ever made you speechless because I did save a couple of these surprises. We're going to share a couple of charts and maybe Jackson, when he catches his breath, because now I'm realizing you may have some tough conversations. We all do with these next couple of charts of what the lesson learned here is we're all going to be surrounded with choices in our life on what we spend for, what we save for. I'm submitting that part of this story we're going to share today, the holy grail of simple stock math, going back to its origination, all of this incredible wealth generation that we're going to share with the simplest of all simple, uncrowded companies, I can't help but notice that it's in the middle of two big numbers that everybody else is distracted by, and everybody is so consumed with the bad news. And it's so easy if you don't stand for something to be knocked over by anything else. I was getting this amazing haircut at my beauty parlor today, which you can see on only if you're a YouTube subscriber. And I'm not exaggerating. There are three people in there. Every single one of them had a different reason that the world was about to end. One of them with 90-day timeline, very specific in that particular case. And the biggest example, we're going to show a chart of two different $1 trillion numbers here that's capturing everybody's attention. The credit card debt in this country with individual families is now $1 trillion. And as you'll notice on this chart, sadly and unfortunately, the exact opposite thing that's happening as interest rates explode higher, now 22% interest rate on that credit card debt, the amount of debt and what we're putting on those cards is expanding. So the worst of all worlds. And that is a very, very big problem and headwind for a lot of consumers. The next chart is an eerily similar number, $1 trillion. For the first time ever, the U.S. government, that's just their debt interest payment, not the amount of debt. The interest payment alone is now $1 trillion. So I stop and I pause and I think back to that trailer that first night with rats chewing through the wall. They figured out a way to do something they knew better than anybody else, or at least believed, and they believed in each other. They started out with no debt, no matter what that meant. I think we all can stop and pause and think about how we apply the bad news and these numbers that are undeniable with how we choose to navigate in that exact same environment. And Willis is one of my favorite examples. And I think back to living, not just owning and buying, but living on that first junkyard.
So there's something that popped to my mind, and I don't know, Ryan, you have to answer this. Have we ever shared a meme?
You got too much house?
Yeah. Well, yeah. I'm going to have that dinner conversation with my wife. I don't know how it's going to go, but I don't think we've ever shared a meme on Mailbox Money, but this is going to be the first. McKay's going to put this on the screen, and I laugh every time I see a version of this meme. And I'll explain it for those, and it goes in line with this. But there's a saying that women will take pictures of like men's rooms or like their apartments, and they'll say, men will live like this and they won't have a care in the world. And there'll be like a mattress right on the floor. There's no table. There's one blanket, one pillow, patio, those white plastic patio chairs, and then like a folding table with a desk on it. And as I think about that and kind of these stories, and in the context of the debt, even on the personal side, you think about this for a company and what not having those debt obligations can do for a company in terms of their cash flow and where they can allocate money. But even as you start to think about this on the personal side, what it can unlock for future growth and future net worth increases, not having to be, worried about these huge credit card payments, skyrocketing interest. I like that kind of story in tandem, and it's really powerful on the company side, which makes intuitive sense. But then we can also kind of apply that same lesson on the personal side, and you can see the same effect happen in your own finances and with your own money.
Yeah, he applied my rule of holes. When you're in one, stop digging. And if you're willing to work furiously, and if you're not digging out of a hole of any kind of debt as a company or an individual or a family, magical things can happen. And this is a big pivot point. So the only appeal to going public was when he learned. And remember, this guy didn't finish school, and he's buying up and cobbling together these junkyards. And I'm skipping past some fascinating parts of his story in the book that I highly recommend, where he basically turned junkyards into Disney World. And what I mean by that, as opposed to a one ticket decision, everywhere they turned, they couldn't get out without another service or add-on. And fast forward today, something nobody could have predicted. As technology gets better and better, cars are written off as complete losses quicker and quicker. So the junkyard business has never been better. And if you want to include any bad news, whether it be natural disasters, hurricanes, also end up in bigger demand for junkyards. We're going to show a picture here in a minute that will make anybody eyebrows raise. I just pulled up one of thousands of their online auctions every single day. But as he was building this up, he never had any intention of going public. He didn't even know what that meant. When he finally learned that he could grow even faster and do even more and not have to pay people back for it by taking on partners as opposed to taking on debt, and I submit there's a little evidence on the world of abundance. If he owned less of his business but had partners and stakeholders by taking this company public, although anybody can apply this same principle in a lot of different smaller versions, he was fascinated with that idea. He knew nothing about how to do it. He didn't know anybody on Wall Street. So he goes to the library and he kept looking up IPO, and he couldn't find anything. And when you're as relentless as Willis, he went to several libraries over several days, never stopped. He finally saw one man in a suit in the business section, ask him, and he said, "Oh, do you mean initial public offering?" He said yes, and he was off to the races. He devoured the book from Ernst & Young that he found, said he didn't understand most of it, found somebody who could help. They dropped him off in a limousine after a jet in his Wall Street fancy clothes, and he's laughing in his blue jeans boots with an Oklahoma accent, and it was on. He dropped the prospectus of his competitor, which had clued him into this idea that there is something called going public and selling stock. And his only pitch, he throws the prospectus on the table. This is my kind of roadshow, by the way. He said, all I know is I'm better than these guys. They have a pile of debt. I have none. And he proceeded to order the pork chops and gravy, and it was on. So they went public, and I'll share just how well they've done and an example that we can apply across the stock market to this day with an updated number with the simplest of stock market math. What do you have in debt, or what do you have in cash? If we just start there, we're going to every week we're going to share one clue, one piece of evidence, something anybody can get their head around, but in the most fascinating ways. And the other clue, when you look back and how a company becomes bigger by staying open-minded, curious, and humble. he eventually needed some folks to help him as this company became one of the most successful business stories in American history. He looked back and there was this young guy he said he could not stand. And I'll provide one more quote from the book to just show you how we all need to keep open minds, especially those of us with daughters. Jackson Wood, you better be listening. So he couldn't stand this young kid. He kept coming by his house as a teenager and he kept asking him questions. And he finally said, I want to learn business. I want to drop out of school like you and learn how to be a businessman. And Willis said, and I quote, every time I would immediately grab a book and run to the bathroom to avoid him. But eventually, Willis's wife told him to keep an open mind. And Willis told the guy to grab a broom and he could start out sweeping the floors. And then he told him to learn how to drive a forklift like he had. And today he's CEO and Willis's son-in-law. We better all keep an open mind as businessmen and dads of our daughters. So I'm going to share the chart of that little bitty company that had a guy running it, hardworking, with no knowledge, no schooling, had no idea how to go public, but did, compared to the stock market and the bluest of the blue chips and all the Harvard, MBA, and Wall Street grads and big investment bankers with their fancy shoes and helicopters and jets. And what you're looking at, and if you're not on YouTube, I will simply tell you that from 1994, this company went public to today, it's up over 30,000%. And the stock market has done plenty fine. The one you hear about, just buy the index, buy the market, and you're going to outperform any active manager, did really, really well for anybody that just did that. It was up 1,500%. So there are absolutely ways, and Willis Johnson is a great example of one, to do this differently. And he did it with no debt. He showed how stakeholder sweat can turn that $15,000 profit that he learned from his dad's hard work and instincts into a debt-free $44 billion company. And I thought, and just a quick example of the math, one of the metrics we use in our stock tournaments to select businesses and start to dig in and do homework and put the nerdy math grease under our fingernails. If you just look, if all you did with everybody, and this is my antidote for anybody that's talking about runaway debt and the Federal Reserve and treasuries and yields and rates and, oh my gosh, it's going to be the end of the world, as I just heard about at my beauty parlor. And yes, the team here laughs when I call it my beauty parlor. So I'm going to do that in Texas. They still call it beauty parlor. I'm the only one in there without blue hair. And I feel super young when I go in. That's what I do. The antidote to that, there's a different way of approaching it. And of course, I'm not ignoring the reality and the macro events and interest rates. And look, if these little old ladies and men and anybody else can go get a 5% CD, that is competition for a stock with risk for the first time in 2 decades. I acknowledge that. But businesses and their ability to create stakeholder value and substantially outpace inflation, because that's the problem with a CD, is unlike anything any of us have ever seen at any size level investor. So real quick, one of the variables to share on today's show. So if you look at the S&P 500, there's 100 businesses with no debt. So they are not subject to this crippling high interest rate. And let's be clear, the level of the interest rates isn't the problem, because we've been there. Any of us that have been doing this for the last 3 decades have seen rates this high before and higher. What caught people off guard, even the so-called smart money, is the quick acceleration. So some of them got caught off sides with their savings account. And we have several episodes on banking yourself and avoiding that interest rate risk. But it's a real deal for a lot of businesses and a lot of industries. that had too much debt, and it's rolling off and renewing at much higher rates, and their math is upside down. You just don't have that problem as a family or business if you choose to go Willis's route. So the debt-free stocks in the S&P over the last 5 years are up 125% against the entire S&P. It's up 73%. Nothing that I would do anything about on its own. We use that as an ensemble with a bunch of other variables and ways to measure. But just right there, the simplest stock math is one data point I wanted to share, and a clue, and a fun clue, and a wild story. And the last picture, then I want you to break this down because you're more of a car guy than me, Jackson. So if anybody's never heard of a salvage yard and even knows what I'm talking about, that they take these beat up cars, the insurance company gets them when they're a complete write-off. They have to do something with them. They sell them to the salvage yard, and they can sell them as is, completely broken, dismantled for parts, or some of them with now more computer chips in the back, fender than I have in my office. They're just fine, and they can be resold as a very drivable car with a limited fix. So I'm going to show a picture that would kind of blow people's mind on what else is being done at a salvage yard and a junkyard. So if you're not looking at this, and if you're listening, Jackson, will you describe what is currently available at an online auction today from our favorite junkyard? Do you have
the
that
picture
there, my man?
that I do? Yes, it is my son would call it, Dad, that is a sports car. It is a Ferrari, a white Ferrari. It's sitting in the junkyard. 2022 Ferrari, cost pre-accident value more than my first home. And it was sent to this junkyard because of minor dents and scratches. And this is a head-turning, show-stopping car that I'm sure sounds like a jet engine when it drives down the highway. And would you believe it or not, it's sitting right in the center of one of these junkyards.
I'm going to read the number because I know Jackson's being too humble with his first home, because now he's really worried about tonight's supper table conversation about cutting expenses and what it takes to follow our dreams. So he's not going to tell you what he spent for that first home. But I will tell you that the pre-accident value for this one of thousands of automobiles listed every single day by this salvage yard is $288,000. Ladies and gentlemen, your debt-free junkyard with a business unlike any we've seen. But more importantly, this isn't a stock recommendation. It's a story and some math that I think any of us can apply to making our lives and our businesses even better with the simplest of math, which I do believe, and I've learned, is the Holy Grail.
I absolutely love that. The lessons are profound on the company side, on the investing side, and the personal side. I'm going to and I'll report back next week how this supper table conversation goes tonight. But that was a great story, and I'm looking forward to giving out that book. So leave a review, and we will get you a copy of this incredible book. I just ordered it on Amazon, so I won't snag the free copy from Ryan, but we will send one to anybody that gives a review to the show. And with that, we will see everybody next week.
This show is brought to you by Freedom Day Solutions, LLC, a registered investment advisory firm advising individuals and families nationwide. Performance is not guaranteed, and past results are not necessarily indicative of future performance. To learn more, visit freedomdaysolutions.com. This show contains general information that is not suitable for everyone and was shared for informational purposes only. Any forward-looking statement or opinion expressed is subject to change without notice. Nothing contained herein constitutes investment, legal, tax, or other advice, nor is it to be relied on in making investment or other decisions. Clients of Freedom Day Solutions may hold positions in the securities discussed.